Hi and welcome to Investing 4.0 Visionary Investing in Future Trends. Now today we will analyze Alibaba, but before we start I want to say a big thank you to everyone who's already subscribed. We are almost at the 100. I really didn't expect it, and thank you for the nice words and the motivation down in the comment section. Now I did not promote my channel in any way, and I didn't even comment under videos to get some attention. I really didn't expect this. I first wanted to bring the quality on a level that I think is good. And since I just started this channel a few weeks ago, I need to grow a lot more. Thank you for your support already, and thanks for everyone who's already following. Now, I listened to some feedback, and as you see, I already prepared the Alibaba logo here on my chalkboard. But since I got the feedback that some of you are watching the video on a smartphone, it is hard to read on a small screen sometimes. So this time I will use graphics instead of the chalkboard. However, I'm going to give you two options right now. You can either decide to smash the like button for this amazing logo, which, by the way, I painted in the first run. So I'm very happy with it. It looks pretty good. From my side, so you can also follow me on Painting 4.0, my second channel if you like. No, but the second option for you is to smash the like button if you like the new version with the graphics that will be flying in from the side. So please let me know which version you like better, but now let's begin. As always, before we start, I have to mention that this is no financial investment advice. I want to create a channel that delivers content and really deep understanding for stocks and businesses without overhyping things. So that is my promise to you, but you also please do your own research and invest carefully. In the end, what I will share is still going to be my subjective and personal opinion, and that might differ from your assessment and therefore ultimately for your investment decision. Now, for today's video about Alibaba, I decided to split it into two parts. As I want to provide you with a detailed analysis, and I don't want to have a 1 hour long video. So this video will be about the history, the business model and the current developments, which basically is the planned and now delayed Antfinancial IPO and the developments in the cloud business. The second video will be about the evaluation, including the discounted cash flow model, as you know from the Tencent analysis, and an assessment of the risk and opportunities, and then obviously also my final summary and my opinion. I'm thinking about sharing my analysis online, like as a document, PDF document. So if you have any good idea how I can actually easily do that, please let me know as well in the comment section. I'd be very grateful for that. But now let's focus on Alibaba. Let's start with the history as usual. The overview that you see on the side is from the SEC filing that you actually can find on the webpage of Alibabagroup, just in case you cannot see it properly. Alright, so Alibaba was founded in 1999 by Jack Ma, a former English teacher who saw the potential of the internet in very early stages. They quickly launched their website called Alibaba.com, as well as a page for local business called 1688.com or Alibaba.com, which is the Chinese version and is a phonetic, let's say, transcription to Alibaba. Alibaba sounds very similar. But don't worry, I'll get you an overview about these websites later on. 4 years later, they launched the Taobao marketplace, and 1 year later, Alipay, the initial version of Antfinancial or the Ant Group as we know it today. In 2007, Alimama was launched to benefit from advertisements and affiliate programs. During the following 3 years, Alibaba launched Tmall.com, the Alibaba Cloud called Aliyun, and Juhuasuan and AliExpress. All these websites that were introduced during the first 10 or 11 years are still the main drivers of Alibaba's revenue, as we will see in the second video. As you might notice, I added Alipay, and Alipay separated from Alibaba in 2011. Then in 2013, the Singles Day on 11th of November each year was promoted. And you should basically, the idea is that you should buy a gift for yourself, opposing to like Valentine's Day or Christmas, for example, where you buy presents for others. And as a fun fact, the Amazon Prime Day, Black Friday and the Cyber Monday actually together only reach about 43% of the revenue that the Alibaba Singles Day achieves. Then in 2014, Alibaba had its IPO on the New York Stock Exchange as ADR, and Alipay was renamed to Antfinancial. And currently, and that's why I'm mentioning it in this video as well, is that Alibaba holds 33% of Antfinancial. Now, during the last years, Alibaba focused on extending their cloud computing services and went global with centers in the Middle East, Europe, Australia and Japan, and it's continuously growing. Now, finally, last year in 2019, Alibaba launched an own operating system and decided to be listed on the Hong Kong Stock Exchange, HKEX, as well. They did not need the money because they had, I think, 33 billion or so still cash on hand, but wanted to be on the safe side due to the increasing US-Chinese trade war, and being listed on the Hong Kong Stock Exchange would be an additional way to get money in case they would get delisted on the New York Stock Exchange. Now, one of the biggest announcements, however, was that Jack Ma will leave the company and only be in the advisory board. So as of 2019 now, Daniel Yongzhang is the new CEO of Alibaba. Still, Jack Ma and Joe Tsai, one of the top managers at Alibaba, are the biggest private shareholders, and the two biggest institutional shareholders are SoftBank and Yahoo. Now, as we see, a lot has happened in the comparably young history of Alibaba. So let us have a look at the company mission and vision, because in my opinion, this would actually help us to compare it to like international competitors like Amazon, for example. So the mission of Alibaba is simple. It is the goal to make it easy to do business anywhere. And actually, the first thing that you see if you go on the Alibabagroup website is the mission statement. Now, I haven't seen this with a lot of companies, and to be honest, I really like it. For a lot of companies, you really wonder what their mission and vision is, and it's really hard to find it. Now, their mission statement is also very ambitious. Alibaba claims to build the future infrastructure of commerce. They envision that their customers will meet and work and live at Alibaba, and that it will be a company that lasts for at least 102 years. Why 102 years, you might ask yourself? Well, Jack Ma answered the question as follows. Alibaba was founded in 1999, and he wanted to build a business that lasts and not to sell. So by shooting for 102 years, it would stretch across 3 centuries. So very ambitious and a very cool statement in my opinion. I mentioned that the mission and vision statement will help us to compare Alibaba to and the strategy to other companies. Jack Ma once said at the World Economic Forum that Alibaba is about making other companies and businesses successful to become the next Amazon. Compared to Amazon, which likes to own and control businesses, Alibaba wants to elevate companies and businesses. So, which brings us basically to their company strategy already and ultimately to their business model. Alibaba is mainly focusing on 3 things. First, globalization. They are dreaming of establishing a World Economic, not World Economic Forum, but electronic world trade platform. Sounds very similar, but it's different things. So they want to be really having a trade platform for the whole world. The second thing is that they want to support and expand in rural areas, as Chinese rural areas are really big and have a lot of potential to grow still. And third, they want to focus on big data and cloud computing. Now, when looking at their business models, we can see 3 main drivers of revenue, sorted from highest to lowest by revenue, obviously. So the first one is e-commerce, the second one is cloud computing, and the third one is media and entertainment. Looking at the history, it already became clear that Alibaba is running a lot of different websites and businesses. So this is the overview from the latest update for investors, the Q3 results that were announced on November 5th. So they're like basically a week old. And during the evaluation, we will see that the core commerce business, as it's called here, is really the main source of revenue. And with the other business areas, Alibaba actually even has a negative EBIT right now, so it's losing money, but more on that in the second part of this analysis. So let me show you the 10 main websites or like businesses that define Alibaba's commerce ecosystem. And to save some time, I'm not going to read to you like the little overview here. So feel free to pause the video right here and read the sentences. I will give you a structured quick overview about where the differences of the businesses are right afterwards. So as mentioned, we can cluster Alibaba's business into 3 categories: e-commerce, cloud computing, and media and entertainment. So let's start with e-commerce. Alibaba's main business model is basically connecting manufacturers with retailers or even with individual, like the end customer by using different platforms. So Alibaba has 3 websites that are worth mentioning here. And the first one is Alibaba.com or 1688.com and Alibaba.com. And they are building the core. They are set up for B2B business where you can buy products in big bulks or like classic wholesale. A lot of items that you can find on Amazon, for example, Amazon.com or anywhere in the world, are actually bought via Alibaba.com or AliExpress. Alibaba.com is focusing on the local market and Alibaba.com is focusing on the global market. AliExpress.com is focusing on the international retail, business to business and customer to customer, but on a smaller scale. So if you only want to buy a few items and not thousands of items, you go to AliExpress.com. Now, Taobao is the 4th in line and is similar to Craigslist, eBay or the Facebook marketplace, and is for local retail customer to customer. Tmall is the last website focusing on high quality goods, business to customer worldwide. So basically all the big brands are selling their products via Tmall. So now we understand the different e-commerce models or business models that Alibaba is offering. So let's take a look at the cloud computing business. I'm keeping this part here very, very short as I will focus on it a bit more in detail at the end of this video. Now, Alibaba's cloud, called Aliyun, is similar to Amazon's web services. It is consisting of data banks, data storage, computing power, and big data, for example. So the difference, however, to the AWS is that AWS is focusing on large businesses, whereas Aliyun is focusing on small and medium enterprises, so a different focus. The last branch of Alibaba is media and entertainment. As this is like really just a small part of revenue and has a negative EBIT, as mentioned, I'm keeping this very short as well. So basically it's like music and video streaming, TV, news, and it's nice to have, but not a super interesting point from an investor standpoint. So that was the overview about the history and also the business model. So let's finish this video with a quick look on the current developments. So the first one is Antfinancial, and I'm mentioning it here as it was in the news very recently, and Alibaba, as mentioned, has 33% ownership of this company. So what has happened here? Now, financial regulators stopped the IPO of Ant Group, which was ready to start their 35 billion stock debut on the Shanghai and Hong Kong Stock Exchange. Now, the IPO would have been even bigger than the one of Saudi Aramco that went public last year and beat all records. Now, why has this IPO been stopped? Now, Jack Ma, the original founder of Alibaba, and therefore also for Alipay back then, spoke on the financial conference, the Bund Summit in Shanghai. Now, during this interview, he complained about financial regulators that they are basically obsessed with minimizing risk and compared China's banks with pawn shops that only lend money to those that have enough financial safety. Now, what happened is that investors were overflooding the IPO with orders so that the total number of shares they wanted to buy was 870 times the number being offered. As a result of Jack Ma's speech and the reaction of the market, the financial regulator stopped the IPO. And in some news you can even read that China's chairman Xi Jinping ordered the stop himself as he didn't like Jack Ma's criticism of the banks, but I guess who knows. The market reacted to this decision, and combined with statements of the government that the big tech companies should be regulated more, the stock price of Alibaba and other tech companies fell sharply. So Jack Ma's speech was very, very expensive in the end. I explained some of the reasons and what this is all about in my last video. Now, last but not least, I promise you to take a look at the cloud computing business a bit more in detail. Now, Daniel Chang stated that cloud will be the main business of Alibaba in the future. So let's have a look. The overall cloud market is growing by 35% per year, and Alibaba just reported on the 5th of November that they have a 60% growth to previous year with Aliyun. So the 35% expected growth year over year for the overall general market comes from the advantages that cloud computing brings. It is lowering the cost significantly by using the effects of automation and scaling. It is increasing productivity through efficiency and speed. It can increase the customer service as all information are stored and shared in one place. And it creates increased security through automated saving functions and updates. But basically, to sum it up, the most successful companies will be the ones that are most flexible and can react to consumer and customer feedback and demands the fastest. So cloud computing makes all of this possible. With an average market growth of 35% per year in the cloud computing market, the market is expected to double in 3 years. When asking a bunch of different companies, 8% of the companies that were asked want to have at least 10% of the work be done by the cloud. Now let's take a look at Aliyun. Aliyun is the cloud market leader in China with about 45% market share, and reported that this business segment was responsible for 5.8% of the revenue in 2018 and already 11% in 2019. Still, Alibaba is not making money with it due to the high amount of investments that are required in the beginning. Huawei, Tencent and Baidu are also trying to conquer this field and are investing, but Alibaba has a clear lead right now and is aggressively investing to try a way to push away the competition basically. Now look at the overall cloud market. Alibaba Cloud only gets on rank 4 internationally. Amazon's AWS has the biggest position in the US, followed by Microsoft, Azure and the Google Cloud. Whereas Alibaba is leading in China, the European Union, for example, is not decided yet, but the AWS has a pretty high dominance here. In my opinion, the European and US market is just a nice to have for Aliyun anyways, and the focus on China is more significant. Alright, this is basically a lot of content, and I wanted to share an update about the cloud business to consider it for the evaluation as well. So I hope you now understand why I decided to split this analysis into 2 videos or 2 parts. Now we know about the Alibaba's history, the business model, and also have a better understanding for the recent developments, namely the Antfinancial IPO and the cloud business. And we'll take a look at the financial data and talk about the evaluation, the opportunities and the risk, and the final summary in the next video. I hope that you liked this video. If so, please leave a like. And if you don't want to miss part 2 of this analysis, as well as any of my future videos or content, please subscribe to my channel as well. That's it for now. I'm out.